On today's Hot Sheet, I'm discussing the CPI report that finished off last week for September, housing inventory data for the past week, and existing home sales. Today is Monday, October 27, 2025. I am Byron Lazine, and the Hot Sheet starts now. Good morning, live from Naples, Florida. It feels like it's been 2 weeks since I've been able to say that. Been on a lot of road shows here on the Hot Sheet, and I am really just thrilled to be with you guys all here this morning from the Naples studio. Let me know in the live chat which market you're tuning in from, wherever you may be today. I see Ruthie in Vegas. I'll be in Vegas in a week. The road has not stopped yet. We got somebody on a treadmill. Agent Dad, do not trip. Okay, that the treadmill watching can be dangerous. It's a pleasure to be with you, and thank you for joining us here to kick off another week of the Hot Sheet, wherever you may be tuning in from today. We appreciate you. Another full week of the Hot Sheet. We do the show every single Monday through Thursday when the markets are open. And it's the only 24-hour look back on the housing market for real estate professionals live on the internet. We're committed to it. I know so many of you are committed to it as well. All right. There was like a lot of news, or not new, I wouldn't say news. There's just a lot of discussion around this inflation report from last week. So we got the CPI came out on Friday. Why did we get CPI from BLS, Bureau of Labor Statistics, last week when the government is shut down? The government's on vacay. They're still having their little draw lines in the sand fight, and they can't seem to get over it and get the government reopened. So why, when we're missing out on labor data, which I would argue is more important than anything right now with the softening in the labor market that we saw, just a month ago before this government shutdown took shape. Well, why did we get CPI? Why did we get this one piece of data that came in at the end of last week? Well, I'll tell you why. There is November 1st, Social Security payments that need to go out, and those payments are calculated on cost of living increases, and they use the CPI data for that, okay? So they were called back in, Bureau of, probably a skeleton crew, whatever. I have no idea. Bureau of Labor Statistics, U.S. Department of Labor, called back in whoever handles these CPI reports to handle this particular report in preparation for those payments that go out in November. So this is a piece of data that obviously handles that, but also is helpful in the fact that it is Fed week. The FOMC is meeting this week, and they're going to make their decision on what to do. There's only 2 meetings left here. It's basically all but certain that they will make their cut, as the markets have projected they will here for this meeting this week. You've got a 96.7% chance, according to CME Group, that this Fed will cut here on this meeting this week. So they've got the CPI data also in preparation for that. Okay. Consumer Price Index. There was a lot of discussion around this, and let me just give you the headline of what's going on here in case you miss it. CPI for September increased increased 0.3% on a seasonally adjusted basis after rising 0.4% in August. Okay, so the rise from August to September, not as big. Over the last 12 months, all items increased 3%. Okay, so that's a year over year. That was up 2.9%. So the year over year mark moves up from 2.9 to 3. When you take out food and energy, it rose 0.2% in September, and that was after rising 0.3% in each of the 2 preceding months. So you take out food and energy, doing a little bit better. Now, the general theme that I think was really important to pay attention to on CPI was, okay, we expected higher and we didn't get higher. We expected inflation to be higher. The all items going up to 3% for the 12 months ending in September after rising 2.9% over the 12 months ending in August has seasonality mixed into it. Okay, we've seen 3% earlier this year. We've seen a little bit under. We've come off of, what's important to remember, we've come off of the 9% highs of inflation. And over the last couple of years, we've continued to move down. We've continued to have disinflation over this time period. Inflation, as opposed disinflation versus what we were seeing when the Fed was saying inflation didn't exist. Inflation will always exist. Prices will always go up. The 2% target means that prices go up 2% a year on the whole, every single year, forever and always. We're not going back to 2019. Okay, the argument that some are making is people can't afford X. Families can't afford Y. That's an affordability issue. That's not an inflation issue. Affordability wraps into income and a lot of different variables. It's not an inflation issue. Inflation is always going to exist. The government printed all that money from 2020, 2021, really into 2022. All of that money created a new level of what things cost. Just because things are unaffordable doesn't mean people are going to take 30% off of their home prices, off their home. 41% of them own it in cash. So affordability, don't get it confused with inflation. Two different things. Inflation does mean prices go up forever and always, as they will. Okay. Here's your 12-month change on CPI. Oh, what do you know? It's been gradually moving down. Okay. We're at the highest level on the monthly, on the all items rather, since January. We've seen it there a number of times. As we get into the winter seasons, expect that number to go down. Okay. What did the market do? I look at the market more than I look at a lot of these folks who want to complain about prices online. Do I want things to be cheap? Of course. Do I want things to be more affordable? Of course I do. I know the Grinch is coming up in 2 months. I'm not him. I'd love things to be more affordable. All right. But people get on and they say, well, inflation's taken off again. It's not. It's not taking off. It's actually doing better than expected. Okay. That's the big breakdown. Okay. Economists had projected inflation would be higher at this point of the year. Okay. The inflation right now, okay, you've got some things that have gone up, and there's some tariff involvement, I would imagine. Coffee, probably 18.9%. Food at home is the one that is doing the worst. Okay. Beef is up. Boy, I mean, I love steak. I don't know if you do. No offense taken if you don't. Beef and veal up 14.7%. Candy and chewing gum up 9.8%. So these are the most increases. Bacon's up 5.8%. Lunch meats are up 4.1%. It's obviously back to school lunchtime. So these are not good numbers on the food. These are pretty big numbers. Okay. And that's for September. So food away from home is also up. Okay. If you look at food away from home, 6.3, and snacks is up 4.2. Energy, gas service, 11.7, electricity, 5.1. On the totality, energy has come way down. Okay. So a 1 month increase there is still coming off of a huge decrease. And then all items less food and energy only up plus 3%. But you have gardening, audio, SIGs, they're all up. Okay. So these are what I just showed you was the biggest increases. Okay. Here's your monthly percent changes. This 0.3% for September, less than the 0.4% for August, less than expected, is not anything we haven't seen before. In fact, the end of last year, we saw similar numbers before you get that seasonal decline at the beginning of the year. These numbers will come down, and on the totality, they continue to trend down. Don't get caught up in 1 month. Don't get caught up on somebody on IG saying that, oh, 1 month, a tick up supports my political beliefs that the world is coming to an end, and I'm going to rant and rave about it. No, inflation is doing better than expected. And I look at how the market reacted, because I think the market is much smarter. I think investors are much more intelligent than some partisan hack on IG or TikTok. Okay. That's just the way I look at it. You could disagree if you want. And what did the market do? The market loves looking at CPI. What did the market say on Friday? They said 400 points to the north. What's the market saying today? The market's saying, let's just drop a record. Let's do a record today. 400 points up yesterday, 200 points up this morning. Let's just set another record for the Dow. We've set 1 million records, it seems like. Yeah, the investors seem to think CPI is just fine. The investors seem to think that there's a potential China trade deal happening, that the trade deals are just fine, right? Like, there was some rhetoric around Canada recently that you didn't see the investors even react to that stuff anymore. Okay. 400 points off of that CPI report. That was before any of this China trade truce. China trade truce is only up 200 points. Like, the CPI was not anything to be concerned with. What do I like about the CPI report? And then we'll move on. I'll tell you what I love about it. This 2-year lagging data. This isn't great data. If the government had better data that they were allowed to work with, I think we'd already be at 2% inflation. I get it. Families can't afford X and Y. We're talking about two different things. Inflation and what people can afford are two different things. We have a price level in this country that is certainly unaffordable. I get that. Okay. That's not what we're talking about when we're talking about handling inflation. What I like here is look at shelter now at 3.6. I mean, that's way higher than it should be. These numbers are outdated. They're 2 years lagging. They're using owner's equivalent rent, which is the silliest metric. That comes in at 3.8. But these numbers now for August to September are finally coming in well below where they previously were. 0.1% on owner's equivalent when the month prior was 0.4. What did Jerome Powell say? Our data takes 2 years to catch up. For 2 years, we've known, Realtor.com's reported that rent prices are going down. 2 straight years, 26 straight months. But yet CPI kept coming in hot. Maybe now, Jerome Powell's right, 2 years of lagging data, we're finally starting to see the relevant shelter data trickle in. We're going to continue to see this number move down, which means shelter's not going to be, the biggest reason for inflationary times. The shelter metric is over a third of what makes up the CPI. Okay. And so shelter has been in this first paragraph forever. Okay. When you look at the largest factor in all items, this is the first month I remember in years where it was something other than shelter. And in this case, it was gasoline, 4.1% being the largest factor, food and food at home being the largest factors. As shelter continues to move out of the equation, which it will over these next 12 months, you're going to see nothing but inflation continue to move down. If they used metrics that reflected today's shelter, today's real estate market, we'd already be at that 2% target that some guy in New Zealand invented many moons ago. All right. Weekly inventory update. Interesting stuff here. Okay. Some of the numbers we're going to go through from Altos Research, I'm going to just tell you right now, are odd. They're abnormal for this week. So it'll be something to look forward into the future. Now, Logan Motoshami over at HW says that this housing data of the last 7 days that I'm going to share with you has been volatile due to certain holiday timing, okay, as well as the AWS outage, which affected pending sales and inventory figures. So I don't know. That's what he's saying. I got no reason not to believe that that is the reason for some of these really high abnormal numbers. Okay. Now we've been seeing since August inventory basically, just kind of walk sideways, do nothing. Okay. Weekly inventory hasn't been doing much of anything here over the past, really couple of months. You see it here. We hit 860,000 at the end of July. And last week we were at 859,000. So from the end of July till last week, we did nothing. And then all of a sudden we see a pop, not only a pop this week, but a new year to date high on single family active inventory. Okay. So we go up to 867,000. This is versus the 735,000 last year. The same week last year, we actually dropped 4,000. We dropped, as recently from 863,000 earlier in October down to the 856 and 859, now back up to 867,000. It's a year-to-date high, breaking the former year-to-date high in August of 865,000. So it took a couple of months to get back to a new year-to-date high on single-family inventory. Inventory is up 17.92, basically 18% year over year. Remember that gap in the spring was closer to 31, 32%. The gap between inventory this year versus last year at that given time period. That was our peak during the spring. We're now at 18%. And we've set a new year-to-date high. It's a little bit surprising to me. This is the time of year when you're going to see the seasonal decline. Look at this. You had the seasonal decline kick in a normal year of 2019 much earlier. Now, interestingly, last year, people hung on later, which I found surprising last year because it was an election year, that people held on longer and that seasonal decline wasn't as sharp as you've seen in other years. So the sellers on the market are like, I want to hang in there and get this thing sold. Now, we don't have nearly as many homes as we had in 2019 and some of the years prior, but depending on how long we hang kind of going sideways here, we could run into 2019 levels, okay? Somewhere in November, which would be interesting. Somewhere in end of November, you could hit where 2019 levels were, beginning of December or end of November for 2019, 859,000. So if we kind of just move sideways through this next month and a week, and really just kind of went net negative 8,000 single family homes, we'd hit exactly where we were in 2019. There's a chance it could happen. I don't think it will. You probably get a bigger decline in November than just 6,000 or 7,000 homes. But if you get another increase here at the end of October, anything's possible. We didn't have a huge decline last year in November, not as big as I would have thought. What did we lose in November of last year? If we go to the beginning of November, we were at 735,000. And we ended November at 719,000. So, what is that? 735 versus, that's only 16,000 actually. About 16,000 on November. And we'd have to gain like 10,000 here at the end of October. That would shock me to see that. You never see that kind of a spike at the end of October, but we could be pretty close to 2019 levels in December, probably be a tick under those on inventory. 2019 what I would consider the last neutral market besides the neutrality that we're seeing right now across the market. So that was interesting, but 7,000 home increase on single family inventory. Interesting, not like jaw hitting the floor, shocking or anything. Just interesting and a little surprising. This number was pretty surprising. Weekly pending sales spiked, shot up to 67,700. You can see it on the line. If you're watching on YouTube, you can see how drastic this spike up is in comparison to where we've been trending, which has been on the weekly down slide of pending home sales, 67,700 versus a week last year of 59,000. You do get these little mini pops from time to time on the way down on the seasonal decline. This is a much larger pop than expected on weekly pending sales. So it's a larger than usual increase. It's uncommon for this time of year. Logan, as he looks at this from HW, looking at this Altos research, is of the opinion that this will normalize this week. I think that's the easy, safe bet to make. This is going to normalize. We had some funky data coming in this week per, Logan. And this is going to normalize because that's what you have 25 years of historical data to suggest that it should. Now, maybe that rate momentum helped out a little bit more. Something helped out new listings. So new listings move up on a pretty dramatic spike from 60,000 up to 69,000. Remember, most sellers are going to be buyers. Okay, most sellers are not selling to pitch a tent on the sidewalk. Most sellers are moving to buy. And so you had pending sales move up in the same week that you had new listings come on. It's interesting, or there's just some glitches in the data, and that this will too normalize. But new listings coming the end of October, yes, there's been rate momentum, but you just don't see that. And you haven't seen it in any of the last 3 years. In fact, in the last 3 years, what we've seen is sharp declines, starting around this time of year. These very sharp drop-offs on new listings to close out the year. You have these weekly pops to the downside on new listings as people decide, I'm going to wait through holiday season and the like. Okay, so we're still trending up over 40% of properties with price reductions. Okay, at 41.6%. This is just a tick lower than 2022 levels. 2022, of course, you had a dramatic, sharp increase on price reductions as consumers really got nervous about the Fed and started to question if they knew what the heck they were doing. This is above last year's level at this time, which came in just under 40%, 41.6% on price reductions. Okay. We continue to see positive readings on mortgage applications year over year. I know we're coming off of historically low numbers. You got to go back to the GFC and to the 90s to see numbers this low on mortgage applications. But the future is bright. Next year's future could look a lot better on sales because of this data. 19 positive readings on the year, 38 straight weeks of positive year-over-year data, and 25 consecutive weeks of double-digit growth year over year. So we're starting to stack the right momentum and numbers into mortgage application data. The spread consistently continues to improve. Here's a look at that number. As long as that spread continues to improve back to normal, okay, back closer to this 2% or under, really 2%, maybe 1.8, you will see rates go down regardless of what the 10-year does if that spread between the 10-year and the 30-year continues to improve. So we've had good growth on inventory. It's probably one of the better things you can say about this year's market. We are starting to see pending home sales try to pull themselves up off the mat. We've been on the mat for 3 years straight. Existing home sales tell that full story. We saw an odd but interesting pop on new single-family listings this week. We'll see if that is a trend or if that's going to normalize with a kind of a downside number, one of those downside spikes next week. But on the totality this year, we're in a healthier spot on inventory. We're getting into some momentum on rates. And those are two arguments you could suggest that make 2026 look all that better. Existing home sales, according to NAR, are also starting to improve. Okay. Existing home sales move up on the month 1.5%. That's 4.06 million now. So we've been trending at the 4 million or under. So getting up over the 4 million mark is a good sign for next year. It's a good sign for Fannie Mae's projection that will, actually get into the 4.4 range on existing home sales. We got to start getting some momentum here at the end of the year for that to become a believable projection. 1.55 million homes are for sale. That includes all pending. That's total inventory pending, single family, condos, everything. Year over year, that's up 14%. Months of supply is up 4.6% versus the 4.2% a year ago. Month over month, that's up 1.3%. Danielle Hale, who I got to spend some time with last week in Park City, is of the belief that on the macro here nationally, we are first time we've seen this normal of a market, a neutral market, as it relates to months of supply across the country. Obviously, that can be kind of exaggerated, those months of supply to the higher side in some of the Sunbelt states, and then certainly more of a seller's market in some of the northern states. 415,200 on the median sale price year over year. That's up 2.1%. And Lawrence Yoon, chief economist over at NAR, says the housing affordability is also contributing to this tick up in sales. So the affordability is being helped by this rate momentum, and obviously those 26 months that I mentioned earlier when talking about CPI of rent prices moving down. All right, 10-year here to start the week, a record Dow Monday here, apparently. 10-year is kind of where we've been, just a tick over 4. We've been a tick under 4. This is still to the low point of the last 90 days outside of, those really low numbers that we saw last week under 4. But it has ticked up a little bit here today, 4.031 on the 10-year. We ended last week's 30-year fixed rate at kind of where we had been all week, 4.19, a tick up from 4.18 on Thursday. The weekly, according to Freddie Mac, 30-year fixed weekly came in at 6.19, exactly where we ended on the daily on Friday. Okay. These numbers probably hold until Jerome Powell and the committee make their decision, and then Jerome Powell has the presser. So it is a Fed week. We'll be breaking that all down on Thursday, as we always do. We pull every mention from housing from Fed, from the prepared statements, as well as from Jerome Powell's presser, which will happen Wednesday afternoon. And then we break it all down here on Thursday morning. And make sure you subscribe to the channel. Make sure you subscribe, hit the notification bell. If you're here on YouTube, thank you. Don't miss any of this week's shows as we lead up to what that Fed decision is and the breakdown of how they're thinking about the future, most importantly. And we'll do that, obviously, on Thursday morning. Again, CME Group has this thing at a near 100% chance that the Fed will make a cut. Polymarket's got it at a 98% chance that it's going to be a 25 basis point cut. And already now for December's meeting, Polymarket is saying 90% chance of a cut in December. Should we get ahead of ourselves here? End of January's meeting, 50% chance that there'll be no change in January. So coming out of the gates with no cuts, but 90% chance on 25 basis points for December, and 98% chance that in 2 days we will see the Fed cut there. All right. Get access to all of the information that I put out on the hot sheet each and every single week on schools. Just go to school.com/BAMX. We've got this thing opened up where you can try it for 7 days. If you're a BAMX member, just remember, you've got a big week here. We've got the live role play mastermind with myself, Tom Toole, Lisa Chinati, right before the hot sheet tomorrow morning. That'll be 9 a.m. Eastern. We have a new member onboarding happening at 4 o'clock. Join us for that. And then we've got Jordan Cohen and Chris Benjamin, members only session in school tomorrow at 4:30 Eastern. So a lot going on this week. To get access to all of the hot sheet data each and every single day, all the slides that I use, just go into the hot sheet classroom and grab them every single day, upload that data for you. And all of that is in here for you, as well as our partners over at Zudilio on the top 10 cash markets for the cash offer markets for the last week. Look at Naples now out of the top 10. Every single BAMX member gets Zudilio's platform included in their membership free. That's a $2,400 value inside of BAMX. And they deal with more cash offers than anybody. Here they are for the week ending 10/24: Vegas, Houston, Miami, Jacksonville, Fort Lauderdale, Denver, Atlanta, Chicago, Raleigh, and Dallas. Those are your top 10 housing markets for cash offers. All the slides from today's show, all of the data points are available for you in this in the classroom for the hot sheet. And then, as well as new this week, all of the hyper local content templates designed by the BAM team available for all of you. So if you're struggling with what to post, don't know what to post, how to post it, what to post, we have new content every single week for you to post. If you're lacking some, community, maybe you go into your office, it's dead. Maybe your broker manager is too busy recruiting agents as opposed to growing the agents they've got. BAMX is the best community. And if you're looking to just convert at a higher level, join me tomorrow at the 9 o'clock session where we go over the language and frameworks to be able to convert at a much higher level. We do that each and every single week. Go to bamxschool.com/BAMX and get in there today. All right. Well, I'll see you guys back here tomorrow morning. Another hot sheet. Have a great Monday. Until then, toodaloo.